good to go.
Cool. So, hello, Matthew. Thank you very much for joining us today. The purpose of this conversation is just to talk a little bit more about Forward Partners, how you're investing in tech and the early stage startups, and then talking a little bit more about COVID-19 and the impact that might have on investments. Just for a bit of background, TechHub is a community of technology entrepreneurs and startups. So within TechHub, we've got 400 startups, all building technology businesses. About 250 of those people will be pre-investment, so people that are building their product now, working on their MVP, and are going to be looking for initial seed investment. About 150 of them will be post-seed investment, working towards their Series A. So as part of our offering at TechHub, we do a lot of support helping people to get investment, speak to investors, and make those original introductions. So we do investor coffee mornings once a week, which Forward Partners have taken part in, as well as other investors. And we just want to continue providing that support and getting questions answered for our community and for the whole ecosystem. So Matthew, to start with, can you just give us a bit of a kind of bio background about Forward Partners?
Sure thing, and thank you very much, guys, for having me. It's it's a real pleasure. I've knocking on for like 6-7 years now. Like I've always enjoyed the sort of interactions with TechHub. I think there've been loads of great companies who've sort of gone through the space, and whether it's office hours or the events, I've always enjoyed being some kind of small part of it. And I suppose I've been able to be a small part of it because I'm an investor at Forward Partners, and we are, as a firm, a pre-Series A investment fund. So we make investments of roughly about £300,000 up to about 2.5 million. I was supposed to say 250 million, not quite yet. Up to 2.5 million. So that, as we see it, covers the whole sort of pre-Series A spectrum. So we'll go as early as investing in solo founders who are pre-incorporation through to significantly more developed businesses in rounds of up to 5 million. Like I say, where we are putting in half the round there. And we invest in 3 main areas. So that's e-commerce, marketplaces, and what we call applied AI. So we don't do a lot of deep tech, but we do. We like to take more market risk than we do technical risk, and that's where the sort of applied AI aspect comes in. And what else can I tell you? We're on our second fund right now. We've been around for sort of 6-7 years in the ecosystem. And I think one of the things which is important for any fund is to have something which makes you a little bit different than the next person. And for Forward Partners, we've got quite a lot of that stuff in the form of a studio team. So so Forward Partners is an investment team, similar to what you'd see at any other venture capital firm, but the actual large part of Forward Partners, so I think it's 16 people now, are in the studio team, where we have a fully staffed talent function, growth function, and product function, as well as some ancillary services which help entrepreneurs execute from day zero, but also they're deployed across the portfolio. So that team allows us to invest in those solo founders who are sort of pre-incorporation and the pre-product teams, enabling them to execute faster. But one of the really great things is that as time has gone on and the portfolio has grown and we've got later stage businesses in the portfolio, the studio team now do larger pieces of work for those later stage businesses too. So trying to be as helpful as we can.
Yeah. So that was actually leads me on to the first question really nicely, because you talk about with the studio supporting startups from day zero. Do you actually invest in them at that point, or are you just working with them and then you're looking to invest in them at a later stage?
No. So we're investing in those businesses.
Okay.
So Patch, which some of the people, well, you two guys, as well as some of the people who might well be listening or watching this, you might well have bought plants from Patch, and indeed, I think they're doing a good turn for the time being while everyone's at home. And that investment came from Freddie coming to us, and he was actually still working for his previous employer, at the point in time where we offered to make the investment, and then he left his job and started coming to work for us, and coming to work on Patch.
Yeah.
And so that really, I mean, it was like day minus 37 or something like that, where we sort of invested, and yeah, we were right there from the word go.
Yeah, and that means that you're not afraid to be kind of first money in, which a lot of the
No,
other
no,
VC
exactly.
funds.
That's a preference.
Yeah, cool. Which is good. And another question that a lot of the early stage founders ask us is, when it comes to kind of perfecting their pitch deck, which everyone will sit around for a long time working on their deck and making sure that it's got like all of this useful information in it, it looks really pretty and it's like perfect to talk to investors about. How important actually is it when you're really early stage and you're just having those initial conversations, what the deck is like and what it contains and all that kind of stuff?
Great question. And I think that the answer is quite unhelpfully different for different people.
Yeah,
We've all got our personal preferences, but for me personally, the answer to that question is not very important.
yeah,
Um, on Because of a couple of main things. So when you're like super early days, you may or may not have any hires, you may or may not be in the market, you may or may not have just identified an interesting opportunity which you're just kind of looking to discuss with people and have a prop for that conversation. And so as a result, you don't really actually have that much to talk about. So so spinning out a sort of like 16 to 20 slide deck, which is beautifully designed and all sorts, which could be, I don't know, 8 slides with slightly more information on them, and maybe less time, effort, or money spent on the design. Like, to me, makes
yeah.
no difference.
And is there anything particularly that you would want to see on the deck? Like, obviously, kind of financials and that kind of stuff is the things that people struggle with. How much, like, what valuation they put on their company, that kind of thing.
Hmm.
Is that,
Yeah, I mean, to be honest with you, I think with the financials, they're all. I mean, at the very early stage, they're very theoretical, let's say.
yeah,
So whether you include them or not, I mean, it's kind of less up to me. And also, likewise with valuations for your business, if you're talking to institutional investors like VCs, you can reasonably expect them to price your business. So you kind of don't really need to sort of preempt
yeah,
what pricing might come out of them. So I wouldn't spend too much time on that. I think the useful things to spend time on, especially at that very early stage where we're talking about first money in, what a venture capital firm is looking for really is of course a sense of you as the entrepreneur or as the team, the market, insofar as, is it a big enough market to yield a venture return? And that's not
yeah,
just about total size, it's also about how domestic to international it is, about the competitors that you've got, how old or new or nuanced they are, that kind of business. And then that market is in relation to a use case for your business. Like you'll be pitching, like, I am going to do X for Y is going to be
yeah,
the market, and X is going to be the product. And so that final piece is having a think through, what's a great product for this particular market or use case
yeah,
that you've identified. And what makes a good product is a lot of tangible and intangible things, but ultimately, like, we as investors need to believe in that particular product vision, and that it's a good idea to take you to the place that you're promising to get to.
yeah,
And that sounds very nebulous, and making it a bit more real, what investors love to see is someone who's really gone deep in not only understanding the market, but gone out, talked to potential customers, understood what's working for them, what's not working for them, what they like, what they don't like, and where the gaps are in between there. And then for that to have informed the first product vision.
yeah. So really nailing product market fit in the initial stages is what's going to make someone stand out or a business stand out. How much of it is the team
Yes,
and the
exactly.
founders?
Sorry, say that again. I dropped out.
How much of it is about the team and the founding team and their background and experience and that kind of stuff?
Yeah, good question. So again, I think by and large, well, so the short answer to your question is very important. Um, but the longer answer is just generally speaking, like anybody, whether they're a venture capital firm or venture capitalist or an investor with their own money, it's just unlikely that anybody is going to invest in somebody or some people who they don't get along with particularly well, or they feel as though are not being honest with them, or whatever it is. So there are a few things which entrepreneurs and teams need to manage themselves. They need to sort of be open to building rapport, I think, with investors, and to be open and to be honest, of course. And then when you think about sort of skills and experience, obviously it's amazing if you have some kind of like 10x full stack developer who can speak like 17 languages, and also like had one unbelievably successful consumer and then B2B to B to C startup in the past. Like amazing,
Yeah.
great, fantastic. But like not everybody is like that. And so as a result, I think the minimum requirements that we see is that if you're operating a business in a regulated space, so whether that's to do with finance or medicine or whatever it is, I think you should probably have come from that space, so
Yeah.
that you've got the sort of necessary sort of background information to come up with something sensible, but also to be taken seriously in the market.
Yeah.
Outside of that, I don't think it really matters so much. Using Patch again as an example, Freddie was a brand consultant once upon a time. He certainly didn't know that much about plants relative to a horticulturist.
Yeah.
But he was a consumer and he'd come across the problem itself.
Yeah.
So was the right person, or was a decent person to have a go at it. But we've also all got our own sort of skills and experience just in general, and I'd encourage everyone to sort of make the most, or to take a wide view of how your own background and skills might well play interestingly into the opportunity, because
Yeah.
that's a bit of thinking and a bit of work that anyone sitting in front of you who may or may not give you money probably needs your help to do.
Yeah. And in terms of kind of money in otherwise, somebody having an angel investment already before they approach you, or putting their own money into the business, does that affect how attractive they are to you in any way?
No, not at all. Like I said, we invest at still like a very very late seed stage as well. So those are businesses which frequently other funds or individuals have invested in them, and that's absolutely fine. I think obviously founders getting a little bit further on their own dime is a great sign.
Yeah.
Um, and the difference is that once you've raised money, people expect to see some kind of execution, and if the execution is good, what that means is that we have to pay more for our slice of equity if we choose to invest.
Yeah. Cool. And lastly, on the early stage part, what advice would you give to kind of early stage founders that are looking to approach forward partners or are looking to approach VCs? What's the best way for them to do it?
Um, so I don't think it's any surprise that that introduced deals are very very popular for venture capital funds, um, and that the majority, if not the significant minority of deals that get done in venture land are referred deals.
Yeah.
And I think that speaks to the fact that there's a high failure rate of startups, and there's a lot of risk out there. And if something is being referred to you by somebody that you trust, whether that's another investor or someone in your portfolio or someone just in your general network that you like and respect, that at least like we're all human, I suppose, and
Mm.
that at least to a certain extent, either implicitly or explicitly decreases the sort of the risk to a certain extent. I do appreciate, of course, that it's not super easy for everyone to be able to work their way into an introduction,
Yeah.
and so that's ideal. But firms like Forward Partners We have multiple ways in which you can get in touch with us through office hours programs. We run a slightly lengthier, more educational founders programs. We're running COVID-19 strategy sessions for businesses. Those guys who are really interested in doing properly early stage stuff open themselves up on a fairly regular basis for people to come and interact. And that's certainly the case for us, and that's a great way in, and we've done multiple deals through those kind of initiatives.
That's good to know. Yeah, and that's the kind of thing that TechHub do as well. So that the office hours, investor coffee mornings that we do is all about introducing people to investors so that they can fill their little black book with names and email addresses. And when it comes time to pitch their business, they've had those introductions before.
Exactly.
Thank you.